All right, great. So we're going to go ahead and get started with tax law updates for tax year 2021. Today, we're going to cover the child tax credit and advanced child tax credit reconciliation, child independent care credit, permanent changes to the earned income tax credit, the recovery rebate credit, the new taxpayer authentication system for the IRS's website, as well as a few other things that you'll need to know. So starting with child tax credit and the advanced child tax credit reconciliation. So child tax credit for tax year 2021 is fully refundable. The credit amounts have increased to $3,000 per child from $2,000 per child. And it's $3,000 per child ages 6 to 17 and $3,600 per child under age 6. Eligible children are those under age 18. Previously, it was under age 17, so they've bumped that up a little bit. These changes apply to all taxpayers who had their main home in the United States for more than half of 2021. For those taxpayers who did not, the old child tax credit rules apply, which means they'll get the non-refundable piece and a partially refundable piece. Okay. There are a couple of phase outs, and the way this works is there's two phase outs. The first phase out, the child tax credit is reduced to $2,000 for filers when the AGI reaches $75,000 for single, $150,000 for married filing joint, and $112,500 for head of household. Now, the second phase out starts to slowly reduce the $2,000 credit that is left until it reaches zero. It'll reach zero for anyone whose AGI is over $400,000 for married filing joint, and $200,000 for everyone else. Now, over the summer or beginning in the summer, so July through December, the IRS was distributing payments, advance payments, if you will, of the child tax credit, which totaled half of their total child tax credit amount. The monthly payments were $250 for each child between 6 and 17 and $300 for each child under 6. Now, the calculations for the advance payments were based on information from either the taxpayer's 2020 return or 2019, whichever they had most recently filed. So if they hadn't filed their 2020 by the time the IRS calculated, then they used 2019. Okay. They created the Child Tax Credit Update Portal, or as we call it, CT Cup. CT Cup gave them the option to opt out of receiving the payments, re-enroll if they had opted out, change bank account information, addresses, income, marital status, qualifying children, things like that. The two most important pieces for you as a tax preparer, though, are the history of payments, the amount of each payment, and how each payment was distributed, and whether they used the 2020 or the 2019 tax return to calculate the advance payments. And that becomes important because you may have to explain why the numbers don't line up the way the taxpayer thought they were going to. And we're going to talk about the reconciliation piece. So these advance payments have to be reconciled on Schedule 8812 Part 1B. So the result of that reconciliation is going to be one of two things. Either they're going to get a refundable credit because the calculated credit is greater than the advance payment. This is probably going to be the vast majority of your clients. The alternative is an additional tax, which means they got more advance payment than the credit they qualify for, the credit that was calculated. This is going to be our sort of conundrum this year is how can taxpayers find out how much advanced child tax credit they received in 2021? The easy answer is that the IRS is mailing letter 6419 in January that will have this information on there. Now, inevitably, you're going to get someone who gets that letter and says, well, that's not the amount that I got. They have to take that up with the IRS. You have to reconcile based off what the IRS says they paid, not necessarily on what the taxpayer received. Okay. Now, if they lose that letter, they can access that information from the CT Cup portal or their IRS online account. We're going to talk specifically a little bit more about those two things or gaining access to those two things a little bit later in this presentation. So they can access those sites to get that information. If they previously had a secure access account, they can use that. If they haven't, then they will need to register for a new account using the SADI system. My advice to you would be to encourage your clients that are eligible for child tax credit or got the recovery rebate credit. So that's pretty much everyone, to access their online account or authenticate themselves with the IRS online before the filing season starts, because there's going to be information in there that you need. I will offer this bit of advice. I would not file a tax return that has child tax credit on it without that letter or the information directly from the IRS's website. And the reason for that is, if those two numbers, if the number you have on the return doesn't match what the IRS says they sent, they are going to kick that return into error resolution. Okay. Error resolution, for anyone who's been doing taxes for some time, you guys know, error resolution is where tax returns go to die. It's not uncommon for a return that ends up in error resolution to not get funded for 6 to 8 months. That's going to delay, if you're doing bank products, that's going to delay you getting paid. If you don't, that's still going to have your client calling you, wondering where their refund is for 6 months. So I wouldn't file a return without that letter or the information from the IRS website, from their IRS account. If the return has child tax credit, I wouldn't do it. That's just my advice. Now, for those people who received more advanced credit than they actually qualify for, there's a safe harbor that Congress created for excess advance payments. So taxpayers will not have to repay an overpayment of up to $2,000 per child if their AGI falls below this amount, right? So if they're single and their AGI is below 40,000, they don't have to pay any of it back. If it's above 40,000, it will phase out between 40 and 80,000. After 80,000, they're going to have to pay all of it back. But between 40 and 80,000, they're going to have to pay a percentage of it back. And those numbers adjust by filing status, right? Married filing joint, it goes up to 60, and that gap and the phase out window is between 60 and 120,000. For head of household, it's AGI below 50,000, and then the phase out gap is 50,000 to 100,000. In response to all of this, the IRS has recreated Form 8812. Now, previously, the Form 8812 was only used to calculate the additional child tax credit, so the non-refund or the refundable part of child tax credit. Well, now it is being used to calculate all of child tax credit because all of it is refundable, as well as the other dependent credit. So now the 8812 used to be 1 page, now it is 3. The vast majority of your clients will only need to complete page 1, which is where it calculates both the other dependent and the preliminary child tax credit, as well as the new refundable credit. So pretty much everything is going to be in there. Page 2 only applies to those people who had their homes outside of the United States for more than half the year. And then page 3 only applies to those people who have a payback because they received more payments than the calculated credit. Child and dependent care credit. So this is a big one. You're going to see a big increase, and you're going to have a lot of questions from taxpayers on this credit. So typically, or historically, the child and dependent care credit has been non-refundable, which means it can only be used to reduce their tax, right? The tax due. For tax year 2021 only, the child and dependent care credit is fully refundable. So whether they have zero tax due or not, they still qualify for credit the same as they would for EIC or child tax credit, right? They have also increased the credit significantly. Now, here's where you're going to kind of run into misinformation being strewn about on the internet and social media. They're going to see this $8,000 number or this $4,000 number for one child. And I've already started to see the posts. It's like get up to $8,000 for one child. No, that's not how the credit works. Okay, 8,000 is the cap on the expenses. Meaning, if they paid $4,000 for childcare for one child, they put in $4,000 as the expenses. If they had $25,000 for childcare expenses, they put in $8,000 because 8,000 is the max. Okay. Now, the credit is then calculated based off of their AGI as a percentage. So if their AGI is under 125,000, they get 50%. So using the example that I had earlier, if they had $4,000 in childcare expenses and their AGI is under 125,000, they would get a $2,000 credit. Okay. If they have 2 or more children, the expense cap increases to 16,000 and the maximum credit increases to 8,000. Okay. Now, if their AGI is over 125,000, the credit will gradually reduce until it reaches 20%. When the AGI reaches 183,000. All right. And that 20% will apply for AGIs between 183,000 and $1 and 400,000. That's a typo on this presentation. I apologize. The credit completely phases out at 400,000. So if their AGI is over 400,000, they do not qualify for this credit at all. All right. So, a couple of additional points to the changes for child independent credit. For taxpayers who had their main home outside of the U.S. for more than half of the year, this credit goes back to non-refundable. It is no longer a refundable credit. Okay. If you need more information on this credit, go to the FAQ on the IRS website. It's Child Independent Care Tax Credit FAQ. All right. There's a new line on the 1040 Schedule 3, Part 2, line 13G, that shows the refundable credit. Okay. On Schedule 3, Part 1, line 2, which is where it was last year, it is still there, but that is only for the non-refundable credit for those people whose home was outside of the U.S. for more than half of the year. Okay. Couple of other things. I'm not going to spend a whole bunch of time in this particular section. What you really need to know is line 10 shows you the calculated credit if the credit is refundable, and line 11 will show you the calculated credit if the credit is non-refundable. Okay. A couple of permanent changes to EIC. The investment income max has increased to $10,000. It used to be $3,600. So that's a pretty significant increase. And taxpayers with children without SSN. So if the taxpayer has a social and the dependents have ITINs, the taxpayer can still qualify for EIC under the group or under the eligibility requirements for taxpayers without dependents or taxpayers with no children. They can now qualify, even though they have children, they don't have children that qualify. So now they are able to qualify for that. I don't imagine you're going to run into a whole lot of those simply because the people who would qualify for that, the phase out is pretty low. You got to be a pretty low income to even qualify for EIC with no children. Okay. This one is a little confusing. So I'll try to break it down so that it makes a little more sense. So taxpayers, let me take a step back. So last year in your tax year 2020 returns, you were able to use their 2019 earned income to calculate EIC if their earned income was greater than 2020's earned income, right? For 2021, you're going to be able to do exactly the same thing. You will be able to use their 2019 earned income to calculate EIC, not their 2020 earned income, but only if their 2019 earned income is greater than their 2021 earned income. All right. Now, but a couple of changes to the criteria for individuals wanting to qualify with no children. The minimum age has been lowered to 19. It used to be 25. Now it is down to 19, and the maximum age has been eliminated. So taxpayers over 65 can now qualify for EIC with no children. Okay, the maximum credit is $1,502, and the credit is fully phased out at around $21,000. Now, keep in mind, for these individuals, they still have to have earned income. And I look specifically at taxpayers over 65. A lot of them have retirement income or Social Security. That is not earned income. That is unearned income. So that would not count as that wouldn't qualify them for earned income if that's the income that they have. Now, for those that are under, that are on the opposite end of the spectrum, those that are 19, 20, 21, those people who now qualify with no children, to qualify for EIC, you cannot be claimed as a dependent of another person. So if they're being claimed on their parents' tax return, they wouldn't qualify here either. So just a couple of things for you guys to look out for that might be a little bit different than last year. The recovery rebate credit, again, I'm not going to spend a bunch of time in this. I think we all know about the recovery rebate credit. It's been highly publicized. What I'm going to tell you is the reconciliation is exactly the same as it was last year. You're going to reconcile it exactly the same way. They're going to get letter 6475. It's going to get sent out in January, and it will give them the information that you have to put in the software. Again, we're going to run into people who say, well, I didn't get it. Well, the IRS sends you a letter that says you got it, you got it. And if you didn't physically receive it, you've got to take that up with the IRS. The taxpayer needs to contact the IRS directly to figure out where that money went. But the IRS did distribute it, and that's what's going to show up on 6475. Now, they lose that letter, they don't get it, whatever the case is. Again, they can get that information by logging into the IRS online account. So as I said earlier, I would highly encourage you guys to get your customers to go ahead and to set up their accounts on the IRS portal, just in case they want to file before that letter comes. My other advice is the only tax returns that I would be sending before the IRS actually opens up officially would be any tax returns for someone who is requesting a pre-acknowledgement advance. If they're not requesting a pre-ac advance, they got to wait for the post-ac anyway. And as we saw last year, we don't know what tax laws are going to change even into January. And if we had held off on a lot of those returns and sending those before the IRS actually went through, we might have been able to fix unemployment compensation or the recovery rebate credits or whatever else we needed to change. Because keep in mind, once you send that return to the filing center, it's locked. We cannot recover it. Okay, so moving on, the IRS rolled out their secure access digital identity system, I guess is the process for authentication is what they're calling it officially. A couple of months ago, I want to say it was the beginning of November, the end of October. So what your taxpayer will do, they'll go to tools and applications on irs.gov. They will open up either the CT Cup or the view your account information. And at that point, they can create an account with ID Me. So they'll do an ID proofing authentication. And then they can, once they've done that, then they can go back and look at the CT Cup or the individual online account, and they can always use their ID Me after they have created the account. And I'm going to talk to you about what they need to do to authenticate so that you're able to help them. So what does the taxpayer need to authenticate? What they're going to need is a picture ID. My advice to you guys is advise them that they should use a government-issued photo ID. Driver's license, Texas state ID if you're in Texas, or state ID. Military IDs would be fine, passports, those kinds of things. They're going to need a cell phone with the ability to take a photo and upload capability. So there's two parts. They need to have a front-facing camera and a rear-facing camera so that they can take a picture of their ID and they can take a picture of themselves. And I'll talk about that in just a second. They will need another piece of evidence to prove who they are. Car registration, bank statement, utility bill, something like that. And depending on the evidence type, they may need to provide 2 or 3 forms of evidence as proof of who they are. And then they will need an email address. So let me talk to you about what that process is like, at least as the IRS has explained it to me. What they will do is they will start their account with ID Me. They will take a picture or scan of their photo ID. They will upload that, and then they will take a selfie and upload that. And the IRS will use highly advanced facial recognition software to determine to confirm or authenticate the person who is in the picture that was uploaded is the same person who is on the ID that was uploaded. So this is, I know somebody may be wondering, this is not something you can do for them. They have to do this themselves because you can't take a picture of you and a picture of their ID. It's not going to match, right? Now, if they already have a secure access account or they already have a login to CT Cup or the to the IRS, to their IRS account, they can continue to use those. Those are still active. Those will not be inactive, at least for the initial rollout. At some point, they may request that they do the ID Me, but they don't have to do it now. Okay. But for anyone who does not already have an account, I encourage you to encourage them to go create one. Go through that process now before we get into the filing season, and then they're scrambling to try to do it. Okay. Couple of other things that we need to know, sort of reminders on some things as well. So beginning this filing season, so the tax year 2021 filing season, you can now electronically file amendments for returns that were originally paper filed, and if the taxpayer is making a filing status change. I say and or. So those two things were hard rejects last year. They won't be going forward. Additionally, we got some clarification from the IRS. So if in the process of creating an amendment, the taxpayer gets a refund, that will be issued to the taxpayer via check. They will not do direct deposits on amended returns, at least not this year. That's why I put this. This will potentially change for tax year 2022 because there's been some serious discussions about that changing. Okay. The COVID-19 or disaster-related withdrawal from retirement accounts, if you guys did these last year, Form 8915E. So what the COVID relief bills did was allow taxpayers to withdraw money from their retirement accounts, their 401ks, and the such, without paying penalty, and they could elect to have the amount withdrawn taxed over 3 years. So they basically split that money into 3 and it gets taxed each year. 2020 was the first year, and you guys used 8915E to do that. For 2021 and 2022, you will use 8915F so that they can pay the taxes on that. You will need to know the amount that's being taxed each of the 3 years, which you can find on their 2020 return, Form 8915E, line 9 or line 17, depending on what type it was, okay? Self-employed credit for sick leave and family. So this got basically re-upped. So it got re-upped. Originally, it expired, on March 31st, 2021. They re-upped it. So it's been extended for April 1st, 2021 through September 30th of 2021. So they reset the 10 days. The max number of days that you can do for the family leave credit is now 60 days. So revisiting some of the general details of the credit, as far as the sick leave goes, it applies to self-employed individuals. They could claim up to 10 days of sick leave if they were unable to perform their services due to having COVID, or the individual was caring for an individual because of COVID-related reasons, right? So the sick leave is specific for those people who either had COVID and weren't able to do their self-employed business, or were taking care of someone who had COVID. And the credit amounts are different depending on who had COVID. The credit amount for themselves is $511 a day. When caring for another, it was $200 a day. Now keep in mind, if the IRS audits them, they're going to want proof that someone had COVID. They're going to want documentation on that. You don't necessarily have to have the documentation. At least that's what the IRS expressed to us. But let your taxpayer know that if they're claiming either one of these credits, there is going to be the potential in an audit for documentation to be required. Now, family leave is different. Okay, family leave is self-employed individuals can claim up to 60 days if they were unable to perform their services because of certain COVID-19 related care they provided for a son or daughter under the age of 18 whose school or place of care was closed for reasons related to COVID-19. Now, if you were in an area where schools were still closed and self-employed people were having to take care of their kids at home, then that applies. Now, this is where it gets a little tricky. And I'm going to use my school district as an example. We had a student at Cy-Fair High School here in Cypress, Texas. Cy-Fair was open, but the students or the parents had the choice to do remote learning or in-class learning. So the people in my district would not be able to claim this family leave credit if they were self-employed because the school was not closed. They made a choice. The family leave only applies to those people who didn't have a choice, right? Their school was closed, so they had to be at home. So that's one of those things. And that credit amount is $200 a day, which means the cap out on that credit is like $12,000. So encourage people to be careful with what they're doing with that. It would be my advice to you. That's on Form 7202, I believe, is the form that goes to. A couple of other changes that you might see on the 1040. One is charitable contributions for non-itemizers, so those people who took the standard deduction. The amounts are the same, but it moved from line 10B to line 12B. Not a huge deal. There was some wording changes on line 19 about child tax credit and credit for other dependents. Changes to a couple of lines added to line 27 for non-taxable combat pay and prior year earned income, or 2019 earned income really is what it should say. There's the wording was changed for the refundable child tax credit on line 28. So you're going to see some new wording on the 1040, but nothing groundbreaking in here. So some other things, you'll notice the Schedule 1, Schedule 2, and Schedule 3 are longer than they used to be. They broke out a lot of individual lines where we used to have things that were grouped together. For example, 2A was probably line 2 on Schedule 1. Now it's 2A through 2P because they broke those out because they used to be write-in lines for additional items. The only thing I'm really going to point out specifically on this is there's two things. One, line 19 on Schedule 2 is for those people who received more advance payments for the child tax credit than the calculated child tax credit. So those people have to pay back. That will show on line 19 of Schedule 2. And then line 13G on Schedule 3 will show you the refundable child and dependent care expense credit. So those are two new places that you guys might need to look to see things. So I'm going to stop here and sort of open this up to you guys and see if there's any questions that you have about anything we've covered. You can unmute yourself or you can ask in the chat if you're not comfortable, speaking. All right. Let me end this one and we're going to start the next one. All right. So now we're going to talk about what's new in the software. There haven't been a lot of new things, honestly, this year with all the tax law changes and things like that we've gone through. So we'll talk about some improved security. We made some changes to the interview mode. We redesigned the invoice. There's a better wallet integration, pay junction integration as well. So what we're going to cover is all new software enhancements, new and updated 1040 forms, new and updated business forms. Okay. So the IRS has mandated that all tax software offer MFA, which is multi-factor authentication, or two-step authentication, is something that you guys have maybe heard before. Now, when you first open the software, there is going to be this checkbox down here at the bottom. So after you've done the install and you log in the first time, you're going to get this checkbox that says opt into multi-factor authentication. I'm supposed to encourage you to opt into multi-factor authentication. What I will say is this: if you opt into multi-factor authentication, you will scan a QR code with your phone, and every time you log in, you will have to get a six-digit code. Six-digit code from your authenticator on your cell phone to be able to log into the software. That is not something that you want to do. Uncheck that box and then hit OK, and you won't see multi-factor authentication again. If you ever decide that you want to enable it or you want to disable it, you can do that from login preferences. So set up login accounts, and then down at the login preferences, you can hit the MFA button and it will disappear. I'm sorry, it's under utilities user preferences, which it shows right here. All right. So this is the box that will come up. You'll get a verification code box that pops up. You can use pretty much any authenticator app that you want. The most popular one is the Google Authenticator. I use one called OneAuth that I use for a couple of other programs that I work in. It does increase the security. It does keep you more compliant with the IRS. But you're not going to get penalized if you don't do it. I'll say it that way. Okay, on the interview mode, which very few people use, but it's something that changed, so I have to bring it up. The state section was expanded. It's going to be easier to complete the entire return in one area now. That's kind of it. So the invoice. So invoice fees are easier to understand. We redesigned the return invoice into 3 sections: fees related to tax preparation services, fees related to software and transmitting services, and itemized billing charges. Now, I'm going to show you a couple of screenshots. So this is fees related to tax prep, okay? These fees are paid to you. That's the best way I can describe it, okay? These fees, in terms of fees related to software and transmitting services, these fees are all paid to someone else, okay? Now, the first thing you may notice on this screen is something that I have to bring up, and that is that the technology fee says $4. So recently, within the last 6 or 7 months, maybe, the software developers made a change, okay? The transmitter fee, or the transmission fee, which was right here on this line, was $4 previously. It had always been $4, and the technology fee was $25.95. Okay, what they have done now is swapped those fees. So the transmitter fee is going to say $25.95, and the technology fee is going to say $4. Why did they do this? Well, because the technology fee now applies to all returns. So whether it's an e-file or a bank product. So if you e-file a return that doesn't have a bank product, the technology fee will apply. And SimpleTAX will invoice you for that fee. You will pay that fee to SimpleTAX, and then SimpleTAX will pay that fee to the developer. We opted for that method because that was the easiest way to keep everything straight and make sure that you guys weren't overcharged. Okay. If you have any questions about what that means for you and your individual office, please get with your SimpleTAX sales associate, and they can explain everything to you if they haven't already. All right. So moving on, improved wallet integration. This is one of those things, unless you're doing business returns, by and large part, this won't help you a whole lot. These should usually say 0 for you. Under the technology fee and electronic filing fee, they should say 0 because you're paying that fee to SimpleTAX versus paying it directly out of your wallet with every transaction. Okay. If for whatever reason you see something different in this screen, please call support and let us know and we'll get it fixed. All right, so we've integrated PayJunction. PayJunction is a merchant service, and it will help you simplify the payment process and improve your customer experience. To utilize this integration, you have to contact PayJunction and set up an account, and then you can actually set it up. They'll give you API settings, essentially your login and password in setup office setup. And what this will allow you to do is inside the software, there's a payment button inside the return, and you can actually process payments through PayJunction instead of, however you're doing it now as far as credit card transactions. Okay, so I encourage you, go look, see what it is. It doesn't make, it doesn't change anything for SimpleTAX one way or the other. This is just a way for you to collect your money, your prep fees on those returns that don't have bank products. All right, couple of new forms. The 8911 is used to figure any credit for alternative fuel vehicle refueling property placed in service during the tax year. No one's going to use these forms. 8990, business interest expense deduction. Income and details checklist displays and prints that the taxpayer received a tax advance. That will, if they're getting an advance, it will tell them, it'll give them the income and details checklist. We've already talked about Schedule 1 Schedule 1 and 2, 3. So one of the things to note though, Schedule 1 and 2 are now 2 pages when they print. So it used to be 3 pages. Actually, all 3 are. So it went from 3 pages to 6 pages because they added in all these other things. It's a little crazy. All right. Meals are 100% deductible in some cases on the Schedule C 2106 Administer Worksheet. They still have to qualify for those things, but they can be 100% deductible. If you want more information on that, go to the IRS website and look up the meal deduction, and it'll show. The other thing that we have done is we have expanded the EF payment form. This will let you track main return, and then if you did any 1040Xs in which you made direct debit payments. Okay. The 1099 miscellaneous has been expanded and now includes box 11, which is fish bought for resale. And give me a link to the Schedule C for anything that's in that box. We talked about the EIC, so we're good on there. We talked all about the 2441. We talked about the 8812. There are a couple of new business forms, so I'll just touch on these very briefly. K2 and K3. So Schedule K2 is an extension of the Schedule K, and it's used to report items of international tax relevance. Okay. K3 is an extension of the Schedule K1, and is used to report partners or shareholders their share of the items reported on Schedule K2. 7203, we now support this as a standalone form. The IRS pulled the S Corp basis worksheet out of the instructions and turned it into its own form. 8990, we talked about that one earlier. It applies to business as well, not just individual returns. 8996, this form is used to certify that the corporation or partnership is a qualified opportunity fund. My guess is no one will use this form. All right, so that's what we got in terms of what's new in the software. Real quick, does anybody have any questions on that? Okay, great. I'm going to switch screens here so that I can share the appropriate screen. All right. Real quick, do we have anybody in this meeting today that has never used this software before? If you haven't, just unmute yourself and let me know. Two of you I know for sure. The other two I don't recognize the names, and one is a phone number, so I wasn't sure. Okay, so then I'm not going to spend a bunch of time going add new return and all of that stuff. You guys know how to add returns. Okay, what I'm going to show you is some of those changes that we talked about. So I've got a return here that's about 40% done, right? So let's go look at, we talked about changes to the 8812, right? So I wanted to go look at this. So this is a very important checkbox, line 13 here. This is where you indicate whether or not they spent the majority of the year in the United States, right? Whether their principal place of abode was in the United States for more than half of 2021. If you're seeing a non-refundable credit, it's probably because line B is checked or line A is unchecked, rather. If line A is unchecked, then it takes it to the old rules. It's assuming that you didn't live in the United States. By default, it appears that we have this set for to default as checked, which is good. All right, so you can see my refund is already sitting at $3,600. I haven't even added any income. So I'm going to add a little bit of income over here on a W-2. And we'll do a refresh. And now you see, bang, my refund went up significantly, right? So I've got a Schedule C here as well, but I don't have any income on it. And one of the things I wanted to show you guys is right here on this income. So if you go income forms 1099, miscellaneous 1099-AC, 1099-C, 1099-K, you can click form links and actually add whatever occurrence you need to add. Now you want to make sure that you link this to by clicking choices and then selecting the schedule that you want it to go to. If you don't, it will not calculate. All right. So now you see we've got a whole different set now of things. So let me. All right. So let's go look and see. Let's do a verify and just see if there's what we have left. Okay, so let's go here. And cash accounting method. Okay, so this is where you're going to do the reconciliation for those advanced child tax payments, right? You want to enter the amount that they got. So in this case, I'm going to say I got the full amount that I was supposed to get for my one dependent who was under 6. So that would be $1,800. And you'll see it's going to deduct, and my refund is actually going to go down because I already got $1,800 in advance. So that's going to be one of the things you have to explain to people is they're going to hear $3,600 per child under age 6 and think that they're getting all $3,600 on their refund. No, they're not. They're getting half of it because half of it has already been paid to them. So you may have to explain that to some taxpayers. So let's go back. We're going to verify again. Let's go look at. That's an easy one to fix. All right, so let's go to the EIC checklist. Let's see what's different here. Nothing is sort of the answer to this, except there's a section now below this for those taxpayers without a qualifying child. So these are all things for those people who do not have qualifying children to actually still qualify for EIC. Okay. So let's hit verify and then let's see, we've got, now I'm going to show you guys a little tip. Now we are on due diligence, right? So you can answer the question and then hit enter. And if you hit enter again, it'll take you to the next question. Enter, enter again, take you to the next question. Makes navigating through the 8867 significantly easier. Now, don't do what I did. Read the questions, make sure you're answering appropriately. This is for demonstration purposes only. All right, so what do we have left now? All right, let's go here. All right, so let's go look at the recovery rebate worksheet. So it's in the exact same place it was before, down on line 30. You can either check this box or click in here and click worksheets. So if you check the box, you're indicating that they received the full amount that they were supposed to do, right? So that's what I'm going to enter on mine. I'm going to enter that we got the full amount. We're going to do verify. Now all that's left is the 8879. So now we can go, and we're going to go line 5, and I'm going to show you guys what the bank application looks like, just so you can see it. By and large part, nothing has really changed other than the price for a state bank product has gone up from $10 to $14.95. That is something that you guys need to know. Also, we have these here, but it is also for the remote signature requests. It is down at the bottom here, but it is also on the bank application itself. So you can change it here. And these are all sort of the same thing. If they want to opt out, if they want to receive, like nothing is really that different. Now, I will say this as far as those people, anybody who's using TPG, okay? TPG no longer offers the prepaid debit cards. They are using a thing called GoToBank. GoToBank is a mobile app, sort of kind of like Cash App. It's a mobile bank account that's done on their cell phone, and TPG will give you more information about that. They should send you some information. I got mine recently. So let me show you what we were talking about with the fees earlier, right? The change. So here's where you see the transmission fee. So that includes the $25.95 plus whatever I have in reserve, right? Whatever the reserve is and whatever the reserve fee is. Then the technology fee, then the service bureau fee, bank fee. So there's the total for me is $123.90. Up here is where I would have the billing set if I had a billing scheme set. I don't have a billing scheme set currently, so I can just enter it right here. I can do right here, I can just do tax prep and enter that amount. And that will carry over to the bank app. But I wanted you to see sort of how this breaks down. Because look, if we go to this 8879 and we change this to a 1, you're going to see something interesting. And that's on this invoice. Those things are not showing there because you guys are in our group. So that's why I was saying you shouldn't see the $4 fee on the invoice itself, because we are going to invoice you for that $4. So my advice to you is increase your fee $4 so that you cover that and you still make what you're expecting to make on that return. All right, does anybody have any questions about the software at all? All right, I won't tie you guys up then. I appreciate your time. Again, if you have any questions, please feel free to let me know. And we will, I will do my absolute best to answer any questions that you have. So if that's everything that we have, all right, we'll go ahead and end this meeting, and I appreciate.
Question right quick.
Sure, go ahead.
When is the software going to be set out to download?
Software was sent out last week. If you haven't received it yet, contact customer support and they can have it resent to you.
Okay, thank you.
No problem. Anybody else have any questions? All right, well, fantastic. Like I said, we will have this recording probably posted today. The presentations, both presentations that I gave today are available on the SimpleTAX support website. If you go to simpletaxsupport.com, go to SimpleTAX 1040, and then go down to SimpleTAX 1040 documents, and you'll see they should be like the last two documents in the list for the tax law update presentation, as well as the what's new in the software presentation. And again, this video will be posted probably later this evening into the SimpleTAX support YouTube channel. So you guys enjoy the rest of your day, and thank you for joining.